Hey everybody, it's Pete Renzulli. Welcome to Stocks for Breakfast. More importantly, welcome to a new week, a new month. Get August and September out of there. We have a lot to cover today. Obviously, we're going to talk about semiconductor stocks. I'm going to actually show you a sneak peek behind the scenes of some of the metrics that I run for our community. And when you do these kinds of in-depth numbers, so to speak, it becomes a lot easier to find where the order flow is going, and it's easier to piggyback on that. Now, technology stocks have actually taken a pretty big hit over the last few weeks. Nvidia, which kind of led everybody higher, has basically been in a 2-month downtrend. It's still holding that longer-term move, but there's another stock, not only AMD, but another stock that we're going to take a look at right now that should be watched. This stock tripled during, I would say, May through July, that window, and we're going to take a look at that as well. But I want to start out with Coinbase today. Something I don't trade crypto myself, the actual crypto asset itself, but I am a regular trader of crypto-related stocks when crypto and Bitcoin specifically is in play. So we're actually going to talk about that. We're going to actually start out with that, even though we're going to talk about semiconductors. So stick around. I'll be back in just 1 second. Okay, so got to make sure we put that up there. Obviously, everything we talk about here is for educational purposes. Up to you to make that final decision. It's my mission to help you make better decisions. So let's actually start right off with Coinbase. And you can actually see that the stock has actually been in a downtrend after this massive news story. But now we kind of went sideways, and it looked like we were actually pushed down and paused, looking for another push down and probably test down at the 64 level, right? But no, hold on. We actually have some news coming out this morning. Coinbase leaps after crypto exchange wins key license in Singapore. And that actually has it now all the way up from here up to 79 and change. So you can actually see over here, it's up 5%. Now, the one thing I want to talk about here, which I think is very, very important actually, is professional traders tend to have a list of their personal stocks that they trade no matter what. So there's usually 3 levels of stocks that are kind of like your personal money machines, for lack of a better way of putting it, right? You have generally your daily watch list, and that's the list of stocks that you trade absolutely no matter what. They usually have good volatility, good liquidity, and they're probably known as market stocks. And we have a big list of those. They're probably roughly around 18 stocks. And Coinbase is one of those stocks. And you can actually see that coin has not really been in play that much for the last month or so. But when it is, oh my gosh, it is absolutely wonderful to keep an eye on. So keep an eye on coin today. We're actually going to watch that the entire week. And that also means that we'll probably end up trading Mara, or at the very least keeping an eye on Mara, although it's kind of in the dumps right now. But once this group catches a bid together, which you can see here, it's up almost 8% as of right now, which is a couple hours before the market opens. Definitely want to be watching that for the entire week. You might be able to get a good swing trade out of it for the entire first week of October, which obviously means that we can start the month off strong. So I want to dive right in first into Nvidia, and I want to show you why, more importantly, I'm watching Nvidia. Hey, Harry, good morning. How's it going, pal? So we're going to actually start out here. We're going to take a little bit of a deeper dive. You can see we actually call it sheet 38. It's our super secret sheet, right? So you can see we actually run the metrics on sector by sector stocks on the gain or loss for the previous 5 days, and also the difference between those two, right? And you can actually see what stocks are kind of taking a little bit of a hit, right? But this is kind of interesting over here, right? Obviously, energy is kind of sticking out like a sore thumb, as it should be. And we're going to go over a couple stocks there. But the one that really kind of surprised me a little bit is technology. Technology went from negative 171 differential, negative 137, so less bearish, to plus 52 to plus 74. So that is a monster turnaround in just 4 days. So our job then, when we start to notice those kinds of things, is to dive a little bit deeper into rotation, dive a little bit deeper into where is that actually happening. So if we kind of dive into the map, right, go a little bit deeper into the map, let me get that off of there, and take a look at the last 5 days, we start to notice this green pocket of buying here. We have Nvidia, TSM, AMD, Intel, MRVL, and a bunch of those. Now, I want to bring this down a little bit further just to show you how we actually start to work our way through some of these ideas. So once you notice it, then you have to take it a little bit deeper and you start to look for some pockets of opportunity. And the largest amount of stocks that meet the criteria here, positive over that period of time, are some of these semiconductor stocks. And now you also notice another little pocket of opportunity down here, which is software infrastructure. And this is actually a little bit deeper into that, which is PANW, Zscaler, and Net. We'll take a look at those guys in a second. But I think really the biggest thing that I want to get across here is raise your hand if you found the last 2 months in the stock market to be challenging. I think everybody has. There's been the end of August where there was one little boom, right? Kind of made up for the entire month. But for the most part, really the easier ideas to find have either been in the energy sector or one or two stocks in the healthcare sector, which actually Amgen is actually kind of hanging out up there as well. Let me actually take a look at the chart of Amgen just to show you what I'm looking at over there. And we'll come back over into these guys, right? So you can actually see, if you can kind of visualize what the S&P 500 has done over this same period of time, and then take a quick look at Amgen, kind of what we call holding the bid. Now, you got to also set up where is the reward potential for justifying the risk. So obviously the first part of the trade is that it's showing relative strength to the rest of the market. It's paused now for about a week and a half, 2 weeks. And you got to zoom out. You can see 286, 287 level is the next level, that's a healthy move. It's $20 from where it is right now. And then after that, obviously we want to go out to a little bit higher time frame, right? So what I'm trying to do here now is I want to make sure that we're kind of prepping ourselves that if the market does have a rally this week, we want to make sure that we have a list of stocks to go to before that happens so that you're not kind of scrambling at the last minute. So that's really what we're kind of doing right now. We're trying to find some relative strength in a sea of red in the bigger picture of the market. So let's kind of go back a little bit further than that and take a look at the way the last 4 weeks have been trading. And this is really kind of what we've had over the last 4 weeks. Now, why is it so important to take a look at that kind of stuff? And let me just zoom this in just a little bit more for you so you can actually see what's going on here. Sometimes we kind of, the reason we're traders in the first place, the reason we're going out into the stock market and trying to make our own bones is that we have a lot of confidence in ourselves to be able to do that, right? But one of the things that comes with having that confidence is sometimes we can beat ourselves up and feel like we should have done much better. Raise your hand if that matches you, right? Think about that. You look in the mirror, you're like, oh man, why didn't you do something? Why didn't you make more money? Well, this is really where you got to take yourself back and say what was actually available. And I just want to say this kind of like as a friend, sometimes during really tough market conditions, losing a little bit of money is actually good trading, because if you still traded actively and your account maybe went up or down, but even if it went down just a little bit in a really tough condition, which let's face it, you had to be on top of your game for August and September. And if you happen to be watching this video at some point in the future, I just want to make sure I show you what we're talking about. We're basically talking about this, which is basically a push down and a pause and a push down, right? So if you've done okay in this market environment, you're actually in good shape. I can't express that strongly enough. That means that you're managing position size. That means you're being absolutely disciplined with your stop losses. The only other thing that maybe you could have possibly done a little bit better was to pay attention to where some of the easier trades have been, or some of the more obvious trades, which has been in energy, right? We've been spending a lot of time talking about crude oil. Obviously, crude oil is bouncing, still hovering above that 90 level. Looks like it's on collision course to hit 100, right? Some of the stocks in that sector have obviously been pretty strong. You can probably see this a little bit better here, where we've actually look at the higher lows, the consistency of the higher lows. And remember, over here is where the S&P and the market pretty much started to reverse to the downside. So if you take a quick look at that and you see MPC going up, and in that same period of time, the market going down, the VIX actually starting to show a little bit of a rally, which is really more over here. That's where you really need to start to do a little bit more of a deep dive into which stocks are showing relative strength, even if the market is starting to pull back. So one thing that we noticed, and I just want to point this out to you as well, is you need to start running scans that show you above average volume. Now, let's think about why we're doing that. There's 4 things that we're looking for when we're looking for above average volume. We're obviously looking for institutional attention, right? Institutions move stocks around. I believe the stat that I saw just last week, something like 80% of the volume on the stock market is done by institutions. So it kind of makes sense for us to track and piggyback their demand and sometimes their supply if you understand short selling. So when we run scans, typically for double normal volume, we're looking for those 4 things, which is accumulation, distribution, fuel, or exhaustion. And the first 2, accumulation and distribution, those are longer term plays where you might see a stock rally and then kind of go sideways on heavier volume. Sideways on heavier volume after a pause, whether that's to the downside or to the upside. So you got to push up and a pause, or a push down and a pause. If that happens during a trading range and heavy volume churning happens in it, and I want to be clear about this. Let's just use some round numbers. So let's say over a 20-day period, within that 20-day period, maybe you have like 7 to 10 heavy volume days. And typically that is where money is changing hands from that previous trend into where it is being accumulated, or an uptrend and sideways where there's distribution, where it's being sold while prices are still high. That's something that William O'Neill has always taught in Investors Business Daily. I'm not exactly reinventing the wheel here. We want to give full credit where credit is due, but you still need to put in the work. You still need to do that scan every night, right? So those are the first 2 when you're looking to run that scan. And the reason I'm bringing this up is we started to see increase in volume in some semiconductor stocks and some technology stocks. And that's actually why we saw that pocket of green on the screen there, because they were starting to see elevated volume. Now, the other 2, one is fuel and one is exhaustion. I'm first going to show you exhaustion. So what ends up happening with exhaustion, it's on the floor of New York Stock Exchange and among trading firms. It can also be known as capitulation or a cleanup print. So let's actually use a couple of people as an example here. Let's say that Tim has 1 million shares that he needs to sell. And while he's selling it, he's the person pushing it down, pushing it down, pushing it down. And then maybe he's got, let's say he had 10 million shares. Let's make the number really even bigger, right? He starts selling it and is pushing it down, pushing it down. Then all of a sudden he's like, man, I got only 1 million shares left. I got to negotiate a price with somebody to take this whole thing off of me, because when I'm done, it's probably going to float in the other direction. I want to get a good print on that balance. So let's say that Tim calls up Harry, and Tim's like, hey, Harry, I'll give you all of this if you can give me a good price on it. And it looks like it's pulling into support. I'm probably the one pushing it down. Do you want to take this off my hands? So we end up seeing is a big move to the downside from Tim selling. And then there's one big spike where he dumps it. And that's the end of that particular pressure. So we actually have a stock that looks like that right now, which is Boeing. Obviously, Boeing has had this big push to the downside, right? And it might not look like anything is different, right? And especially because we finally punched through this level. However, when you dive a little bit deeper and you're running your scans, you start to notice this. You start to notice an expansion in volume. So you start to notice these things. So at the very least, if you spot exhaustion, what you would actually be doing is you'd be moving down your trailing stop loss if you got involved in this push down and a pause, a push down and a pause, and a push down, right? So very, very interesting how you start to notice these things, and it translates into different trading decisions. Now, when you start to do these scans every single night, this is where you start to separate yourself from everybody who says, oh my gosh, I got caught off guard. Where did that happen? Why did that happen? Let me go look at the news. And you start typing like crazy. But it really comes down to understanding how to read the order flow and read the tape. It doesn't take that long, but you have to run the scans at the end of the day. Maybe spend 5 minutes, 10 minutes, and you do what we do, which is where I put all this stuff into a spreadsheet, right? Once you start to look at this and track this every day, you start to get clues. Now, here's the thing. And one of my friends, Rich actually said this recently, and I thought it was absolutely brilliant. He said, you're not looking for answers. You're looking for clues. Gosh, I think that was one of the smartest things I've ever heard, because what we are doing and when we're starting to trade, we are actually putting together the pieces to build an argument for why we should take our wallet out and accept risk on some of our ideas. So I want you to write that down, kind of take a Post-it pad, put that on your monitor, and remember, as a trader, we are looking for clues. We are not looking for answers. And I think that's why a lot of traders get into trouble, because they're like, wow, there's a bull flag. This is definitely going up. That is not the case. It's probably going up, especially if it has order flow in front of that, but you are looking for clues to determine how much risk is the right amount for that particular moment. So for example, we just talked about distribution. If you have a push to the upside and a bull flag, which is a pause, is that bull flag happening on light volume or heavy volume? Light volume implies follow through. Heavy volume is not what you want to see, and that's typically distribution. So this is where we start to put the pieces together with price action and volume and the optimal entry, and then hopefully you get to the point where you have something similar to what we have, which is a profit maximizer. All right, just want to touch on this here. Our scans, there's plenty of links and videos on the website, on the channel. Go in there, and we have a whole bunch of scans on sector rotation and on that kind of thing. Just do a quick search inside the Stock Trading Pro channel, and you'll be able to find them. So that's where I really want to talk about. Now, the last part of elevated volume is called fuel. Fuel typically happens when you have a move to the downside, you start going sideways, or even just a pause. You can push up and go sideways, or push up and pause. Fuel, if you think about it, I purposely named it this way. Fuel is an example where it's starting a new move. So fuel is typically a candlestick that is large volume, which we call an energy candlestick, but also is supported by a heavy volume candle. So you have a big green candle, and you also have heavy volume. So fuel, you can think about fuel as starting a new move. So when you're paying attention to a pause, we just talked about the first thing we're looking at is the volume during the pause. Now we're talking about the volume breaking out of the pause. You want to see a heavy volume breakout and close near the high. We had a couple of trades. We actually had a trade in CF last week, which I wanted to point out that trade in a second as well. So if we hop on over, so obviously exhaustion there in Boeing. Let's see if Boeing actually ends up reversing. So we actually had this trade here. I want to give you a visual of what the idea looks like here in CF. You can see the profit potential here in CF, which is roughly $20, right? That's a pretty big move. So we've been kind of stalking this thing, and it actually rallied up to that level, broke through, and then you can actually see we actually pulled back right away. Now, here's the thing I want to talk about. We're actually looking at a second entry in this trade. This is really where you really start to need to pay attention to your own results. And I want you to raise your hand right now and say, how many times have you got into a trade as you took the stop loss, right? Maybe you love the idea, it pulls back, you take the stop, and then the stock does exactly what you want it to do. And you're like, man, every time I get out of a stock, I get stopped out and the thing takes off without me. Everybody else is making money besides me. This is where you need to have pre-planned second entries if the idea is still valid. So in this case here, first breakout looked beautiful, big volume, ended up reversing when the Fed made the announcement, everything pulling back, and then came right back and actually had more buying pressure. So we take a look, and what we're talking about is right here. So if we're looking at that breakout, broke out, loved it, took the breakout, failed, pulled back, stopped out, right? Generally at the low of the breakout candles where I'm getting out. So the next day I got out over there, and I'm like, oh man. But then you kind of draw a trend line. And you're like, well, all right, this thing is still hanging in there. And the next day we get this giant reversal candle again. So this is really where you kind of separate yourself from the frustrated version of yourself to the new version of yourself, which is, okay, let me go back to the stock and see if the idea is still valid. In this case, it came right back with what we call a well-bid candlestick. Well-bid means higher highs and higher lows, and more specifically, also close near the high of the day. So that's actually what we have over here. So I want to be completely transparent about this. This is where we put on a second trade if we break out again, because the stock is still valid. Now, it broke out again and pulled back a little bit, but the trade is still valid. Now, here's the thing. This is, again, where you start to become a better trader. You say, okay, the first time it got up to that level, there's some selling at 86, got up there and failed again, but my gosh, look at that profit potential, right? So instead of going in with what we might call our normal risk I've lowered the allocation on this breakout, that if the second breakout fails, I'll get a few more gray hairs. I won't be happy about it. But because we recognized that the first time it broke out and failed, and the second time got to that level, if the second one doesn't follow through, I will have much reduced position size on this one. But if it does follow through and it finally clears that 86 level, then I'm going to look for an aggressive move up to that 106. So I just want to, I think really one of the biggest things I want to try and get across here to everybody, I want you to know that you're not alone in finding the stock market difficult right now. Even somebody like myself, who's a very experienced trader, there's a lot of good ideas out there, but you got to really be on top of your game. And if you're finding the market is kind of beating you up a little bit, it's okay to reduce your share size, reduce how active you are until you start to see signs where the bigger picture of the market is looking better. So if we kind of work our way over to that right now and take a look at what the market's doing, we kind of got to form now a thought process of what is the right way to look at the market now, and how does that translate into new ideas. So if we work our way over into technology, which obviously we could take a look at the QQQ, let me zoom that over here. And if we could take a look at the XLK, right? Both of those guys held the bid, right? They both pushed down. These downtrends are still clearly in place, but we started to see heavier volume reversal. So if we kind of work our way over here now to AMD and getting back to the semiconductor story, you can actually see here, let me kind of zoom that out right there. You start to run these numbers every day and look at what AMD did here. So now it's like, okay, but the stock is still in a longer term downtrend. Yeah, we spend a lot of time talking about, I don't want to fight obvious order flow, which is now pushing to the downside. That's okay. What we're doing now is we're putting it on our radar in order for us to start looking for a new opportunity. Now, it's not coincidence. Basic technical analysis, it got up to that trend line right around 105 and pulled back. So what is the proper play here without kind of jumping the gun and getting into any of these semiconductor stocks early? In this case, because the overall market is a little bit heavier and it's a little bit more bearish right now, in this case, instead of setting a buy stop to break that level, what I would be doing is setting an alert at 105 in the broad AMD stock right now. But also what I mean by broad, I mean, I'll be building a watch list of other semiconductor stocks. Now, there's two levels of order flow stacking, which is the primary way that I look at the market. And again, I can't express this strongly enough. There's no reason to look for entries without having an edge in the first place. And an edge is a way of looking at the market that says, okay, when this happens, there's a high likelihood of follow through. So the first part of the edge, the first part of order flow stacking is how long has buying pressure been going on in that stock, so that we can now say institutions have been putting their own money into that. And we just need to now say, is it one day? Is it 1 week? Is it 1 month? Can we see consistent pushes and pauses and pushes and pauses, which means that they're coming back and doing it again. They're paying higher prices, they're holding higher prices, and they're putting their money where their mouth is. That's one way of looking at it. The second way of looking at it, which kind of builds the argument and gives you a little bit more conviction in the idea, do you see that same stacked order flow either in a sector at the same time, which is what we saw in energy for the better part of 2 months, which is why we can kind of be in a perpetual bull market by basically following where the order flow is going. So again, if you're really on top of this stuff, which is what I do for the community every day, it becomes kind of easier to spot where you should be paying attention and where you should avoid if it's not obvious. So if we kind of get back to that second part of order flow stacking, is has that order flow been going on also in a sector or in an individual industry group? Now, if we take a look at energy, obviously that's been happening in energy for a while, right? We can see that there's been buying pressure here for a while, and a couple of these big dogs, right? Exxon as well. And again, not coincidental, at the end of August, these guys started to rally when the market pulled back. Also, same thing on the other side of that. We started to see a lot of the cruise lines pull back and have been in a nice slow grinding move to the downside. So that's kind of a nice play. Energy going up, airlines and cruise lines going down, right? You can start to play that. It's probably one of the oldest trades in the book, right? So how do we bring this all the way back to AMD? And we can even talk about Nvidia, right? Nvidia actually has this nice 3, 4, 5 week downtrend that got broken on last week, right? But here's what I want to get to in AMD, and this should be something that we can all really take a look at really, really quickly, right? Big volume, something to pay attention, but we have this big move to the downside. So I want you to start to pay attention to, if the stock market is dominated by institutions, and it's our job to track and piggyback what the institutions are doing, that's where it's easy now to look at a chart and say, okay, if I want to put my money into this, how much is the right idea based on how much the institutions are putting their money where their mouth is? So if we take a look at AMD, it should be very easy to identify right now. It's only one day. It's pretty impressive, right? Volume was up. That was awesome, but it's only one day. So this is really where we get excited and we kind of separate ourselves from everybody who's just a chart reader. And we're now talking about being a trader. You elevate yourself. You have a different identity when you start to separate from chart patterns to where you're actually looking for money. You're looking for where that money was put. You're looking for how long it's been put. And then you decide how much you want to put into that deal as well. And by the way, if this kind of stuff excites you and you want to get my picks every day, click the link below in the description. We have something down there for the Daily Ticker Plus where I'll give you all of this every day, breakdowns of everything. So AMD right now, because it's only one day of buying pressure, and I want to put that in there for you again, just one day of buying pressure. In this particular instance, I am going to have an alert set at that longer term downtrend instead of what I would normally have, which is a buy stop. And I'm going to give you an example of that right now as well. So we've been watching and talking about the energy stocks, and we had MPC, which right here was just absolutely amazing. Now, visually, you should be able to see this, right? Look at the higher lows. Look at them paying higher prices over time, not just one day. It's over weeks and a couple of months, right? Now, MPC pulled back over here and was kind of going sideways, still valid, right? Now, at this point, you have to say to yourself, how is this different from the AMD trade and us putting a buy stop, an alert here, waiting to get a fuel candlestick versus this idea right here, which already had all of this stacked order flow and across the energy sector. So what I'm trying to get across here is MPC and the energy sector during that pause was broad-based amongst oil and gas and E&P, plus a lot of other energy stocks. So not only was stacked order flow in that stock, it was also spread throughout the sector. So in that instance, what we did was place a buy stop to get into the trade as soon as it broke out of that level, because there was all that stacked order flow. There was proof. Again, it's all education. When I say proof, I mean that we could look at the chart and say that somebody was paying higher prices for an extended period of time, and it was happening in that entire sector. Although we saw that, we were still waiting for it to get out. So in this case, because we had that proof, we had all of that stacked order flow, I was a little bit more inclined to get in as soon as it broke out because we had that argument. AMD and the semiconductor stocks are a little bit different right now. They've been in 5-week downtrends, 5 weeks of bearish order flow or supply on the market. We had a little bit of news last week, and now they popped. AMD, Nvidia, and actually I want to give you one other one that is, I mentioned before how much the stock has rallied. If you take a look at SMCI for what it did basically at the end of April, and basically one earnings season. That's it. Just one earnings season. The stock went from 100 to 340. So this is really where you start to pay attention to. And again, look at this volume. Look at the volume prior to that. Look at the volume prior to that. So you remember what I said, heavy volume during a consolidation. Look at that spike. Look at that spike. And then earnings came out. And then heavy volume on the push. And then decreased volume during this pause, right? These are the kind of things you start to learn and pay attention to. And now we actually have SMCI working its way back up towards basically right towards this breakout level, right? Depending on where you draw it. So what I'm watching for right now is we're looking for the semiconductor stocks to reassert themselves and get beyond these most recent resistance levels, break this bearish order flow, Prove to me you can get out of there, hopefully with fuel candlesticks. And then we'll look for the first pause outside of that fuel candlestick. So because the semiconductor stocks are reversing, they don't have the same argument of stacked order flow yet, but they're interesting to me right now. So heading into this week, I'm going to have alerts set in those stocks looking for new opportunities. So does everybody see the difference between why you don't need to predict, guess, or forecast? It's a giant mistake that people make in the markets where they're like, where do you think this is going to be a month from now? Nobody knows. Come on, seriously. Nobody knows where it's going to be a month from now. We only have all that information up to that moment where we're about to make a decision. And that's what we're talking about right now, because then we have a whole new set of decisions after we get in. And I want you to write this down as well, that all of the information that got you to the trade is not the information to use after the trade. You have a whole new set, a whole new ball of wax unfolding after the trade is put on, and then you have other decisions such as stop loss and executing your stop loss, if and when you plan to add shares to the trade, and then how you plan to manage that winning trade. So you got a whole bunch of different decisions after that trade gets put on. So I thought it was kind of fun to start the week out and really start to dive in a little bit more on how to manage not only position size based on the kind of market you're in or kind of stocks you're in, but also how to manage when you plan to get into the trade. And I just showed you how I do it, right? So I want to take this a little bit deeper and get a little bit more into the ideas for the week. So obviously we can see what's going on here, right? We broke it down a little bit here. I want to walk on over to here. So what I also do for the community, and again, put my money where my mouth is, right? You can actually see over here, double normal volume. It's a part of what I do every day. So I'm not just saying it, right? And John Bates knows this. John, love you, pal. Hope you're doing well. I saw that picture of the snake you had the other day in that logs, man. I keep that. I don't want anything to do with snakes. So anyway, so now you can start to see how we're starting to track not only in the bigger picture, right? Let's kind of zoom over here again. I just want to remind everybody how we're doing it by sector. Then once we identify some opportunities per sector, and after we kind of break down the individual ideas in the market, high-low differential, advanced decline differential, breakdown. And by the way, look at how different the breakdown differential is here, right? Then we start to go into the individual sectors, and you probably want to pause this, take notes. Riven had a pretty good week. So you start to see how we're putting the whole picture together to put ourselves in position to win. Now, I think the part, I'll keep going through this if you want to take a screenshot of this. You can now actually start to see which stocks in which sectors have order flow. And then there's a whole other, again, like I said, there's a whole other part of the trade where then you got to determine, you near the optimal entry, all that. There's a whole other part of that. But today we're just focusing on finding ideas. You can see nothing in real estate right now. And if you've been tracking those guys like we have been, the residential construction stocks have been getting hit pretty hard after this just amazing, almost 12-month rally. By the way, I hope you participated in that. We've been talking about that one for a while. So as you kind of work your way down, you start to see now Jabil. By the way, did you take advantage of Jabil last week? The after earnings, probably one of the biggest trades of the year. Look at that. That was just Thursday. So make sure you're on top of these kinds of things. You do your pre-market analysis and which stocks have heavy volume pre-market, and is that going to be an idea that I'm going to take a look after the market opens. So anyway, I want you to make sure that you take this list. I'll scroll up really slow if you want to take this list one more time, just to give you an idea of some of the ideas. So obviously XPO is in the list heading into this week as well. You can see again, right up to that breakout level. Looks like it's got a little bit of buying pressure here at the end of the week. MRTX, great call in our community this week. Larry actually had that one in our pre-market game plan. You can see obviously energy is still strong. We just talked about a couple of those today. Costco is actually sitting at or near all-time highs, which what do you call it? Walmart was, but Walmart took a little bit of a hit last week on Friday, pulled back pretty hard. But you can see that I'm actually looking for Walmart to get back above this 163 level. So set that alert in Walmart at the end of the week as well. Williams Sonoma was another big one that we got. And again, this is really where it's important, right? I want to just show you why it's important to keep your analysis simple. Look at that, right? Doesn't need to get more complicated. And look at that. And again, if you're part of our community, you know we're watching it, right? So now we're actually looking during this pause, what kind of volume are we having during that pause? So now we're putting all these pieces together of everything we're talking about right now. And WSM is still valid after this fuel breakout. So I saw somebody type before, can you give me an example of fuel? There you go. Large volume, energy candlestick breaking out of a trading range. That's what you're looking for right there, okay? So just kind of working our way down a little bit deeper into everything we just covered today. I want to get into the sector rotation part of the market. Obviously, ExxonMobil and Chevron. Chevron actually has a pretty decent move here if it can get back above that 170 level, breaking down some of the ideas in energy. This is interesting here, right? MPC is now testing the lower end of that range, not exactly what we want to see, waiting for MPC to get above 158. So again, what does that mean? It means MPC is still longer term bullish, but it's testing the lower end of that potential change of trend. So if I'm not in it already, what I'd be looking to do is set an alert in MPC at this point, simply because it's testing that bottom part. And I'm not just looking to buy the breakout this time because it's showing a little bit of heavier volume during the pause this time. So you see how we're shifting to when do we get in sooner versus when do we wait for a little bit more confirmation? This is really the fun part of the market. And I want to give you that quote one more time. You're looking for clues. You're not looking for answers. And then it's your job to put those clues together, which is going to tell you share size, how soon to get in, what kind of profits to expect. This is the fun part of trading. This is really the fun part, right? So if we kind of continue to work our way through this, I just showed you that metric in technology. So hopefully you understand what that process is right now. We just talked about Jabil and that energy candlestick. Working our way to another idea, CRWD is actually on my radar this week as well. CRWD finally broke out after one earnings report, two earnings report, finally got above that 160, 161 level and put in a pretty decent week last week. It's got this short-term downtrend that we're looking for it to get above, but I like CRWD heading into this week as well. So we just broke down a bunch of stuff. Energy stocks are still pretty good. Broke down a couple of basic material stocks, talked about CF. Oh, actually, the second one was STLD. That was the other one that we're watching this week as well. Right here. So you can actually see we're looking now for a fuel candlestick. You can see how it's actually shown now 2 weeks of stacked order flow, right? But we're not going to get involved until it gets through there, because if we kind of break this down again and we go into, let me actually just do this from scratch again. We go into basic materials and we take a look at how they've been for the last week. Not exactly screaming to the upside, but we do have a couple of pockets of opportunity. If this was more green over the last week or so, I would be a little bit more aggressive on both STLD and CF, but they're not. We're waiting for that to perk up, and you can actually see that over here, okay? So finishing up, obviously, with what we started, which was the semiconductor stocks and technology, where they are showing signs of breaking 5 weeks of bearish order flow, 5 weeks of supply on the market. We're looking to see if last week's demand and those heavier volume moves to the upside lead to a new stacked order flow on the bullish side. So you see how it's kind of fun where we're just kind of putting the pieces together. There's no predicting, there's no guessing, there's no forecasting. It's just paying attention. But you need to learn what to look at so you can read it properly to say, okay, here's what's probably going to happen next. And then we make a plan for what we're definitely going to do. And that's really where trading becomes running a business, right? So obviously we talked about buy stops. We're looking at, alerts in AMD, Nvidia, and what was the other? Oh, SMCI was the other one. All right. So let's make this an awesome week. A new start to the month. Wipe the slate clean of August and September. Maybe you had a good week. Maybe you'll understand short selling, and maybe you made some good money on the short side. But if you're like most people and you're buying only, you got to really dig in and do what we did. And again, if you want me to do it for you and you want to get all this from start to finish from me every single day, just click that link down in the description and learn more about it. It might be for you. It might not be for you, but it'd be kind of fun to have you on the other side for 90 days. I believe that's what it is. So have an awesome day, everybody. I will speak to you soon. Let's go get them this week. Thank you so much.